What happens when a nation rich in resources finds its people struggling to make ends meet? This is the paradox facing the Republic of the Congo in June 2025. Just a few years ago, there was hope. Post-pandemic recovery, oil-fueled optimism. Today, that hope has faded. The economy is sputtering and prosperity feels out of reach for nearly 6 million citizens. The crisis isn't dramatic collapse, but a slow, grinding decline touching every corner of society. It's seen in jobless graduates, rising food prices, and a government struggling to pay its bills. This is a quiet emergency, threatening to unravel years of progress and stability. To understand it, we must look beyond headlines and examine the interplay of global forces and domestic choices. Congo's fate is tied to the volatile oil market, a blessing and a curse that's now exposed the nation's vulnerability. Our journey begins by uncovering the 5 key pressures squeezing the life out of the Congolese economy. Congo's crisis is driven by 5 interconnected pressures. First, GDP growth has slowed dramatically, too slow to create jobs or reduce poverty. Second, unemployment remains high, especially among the youth, fueling frustration and instability. Third, elevated interest rates make borrowing expensive, choking off investment and entrepreneurship. Fourth, persistent inflation erodes purchasing power, making daily life harder for ordinary citizens. Fifth, rising government debt diverts funds from essential services, trapping the state in a fiscal bind. These aren't isolated problems, they reinforce each other, creating a vicious cycle. Slow growth worsens unemployment, high interest rates stifle business, inflation punishes families, debt limits solutions. Together they form a web that has ensnared the Congolese economy, demanding urgent strategic action. The numbers reveal Congo's unmet potential. GDP growth for 2025 is projected at just 2.6%, barely above population growth, meaning living standards are stagnant. Unemployment officially sits at 20%, but among youth, it's over 40%, a demographic time bomb. Millions of young Congolese enter the workforce with few prospects, fueling frustration and instability. The central bank's interest rate remains high at 5.5%, with commercial loans often exceeding 15%, making it nearly impossible for small businesses to grow. Credit is the lifeblood of business, but in Congo, it's severely restricted. Inflation hovers around 4.5%, devastating for those living on just a few dollars a day. The cost of imported food and fuel has soared, squeezing household budgets. Meanwhile, government debt has climbed to 85% of GDP, forcing painful choices between debt payments and public services. The result, a nation stuck in place, unable to turn its resource wealth into real progress. The crisis is as much about lost potential as it is about present hardship. The statistics come alive in the stories of real people. In Brazzaville, Jean-Luc's construction firm once thrived on government contracts. Now, stalled payments and a frozen loan market have forced him to lay off half his workers. In Pointenoire, Sylvie, a logistics graduate, has spent 2 years searching for work. With oil companies freezing hiring, she's left working part-time in a family shop, her skills underused. In the Cuvette Basin, a women's farming cooperative saw their dream of buying a truck dashed by inflation. Their savings lost value, and they remained dependent on middlemen. These stories, of the contractor, the graduate, and the farmers, are not isolated. They show how fiscal tightening, low investment, and inflation translate into lost jobs and blocked opportunities. The disconnect between Congo's resource wealth and its people's well-being is stark. The timeline is clear, from hope in 2023 to hardship in 2025. The economic slowdown is not just numbers, it's lives put on hold. Each story is a window into a system that's failing to deliver on its promise. The crisis is personal, immediate, and urgent. These are the faces of Congo's economic malaise. Their struggles demand more than sympathy, they demand solutions. Congo's slowdown is rooted in its deep dependence on oil. Oil makes up over 60% of GDP, 80% of government revenue, and 85% of exports, a dangerous vulnerability. When oil prices or production drop, the entire economy suffers, revenues fall, spending is cut, and growth stalls. This boom and bust cycle has trapped Congo for decades. The oil sector creates few jobs, leaving most youth to compete for scarce positions elsewhere. The education system isn't aligned with market needs, leading to high youth unemployment and wasted talent. The financial system is tight. High interest rates and weak investor confidence keep capital scarce. Years of political uncertainty and governance challenges deter investment outside oil. The result, little growth in agriculture, tourism, or manufacturing. High government debt, built on optimistic oil forecasts, now forces austerity, cutting investment and social spending, deepening the slowdown. This creates a vicious cycle. Less spending means less growth, which means even less revenue. Breaking free requires more than hope. It demands a new strategy. The roots of the crisis are deep, but not unchangeable. Congo can't wait for oil prices to save it. Real recovery demands bold reform. The first step: aggressive economic diversification. The government must actively promote investment in non-oil sectors like agriculture, timber, and ecotourism. Special economic zones, tax incentives, and cutting red tape can help new industries take root. Education and labor market reform are essential. Curricula must match the needs of a modern economy, and vocational training should empower youth with practical skills. Labor laws need updating to move workers from the informal to the formal sector. Addressing the credit crunch is critical. Policies should encourage lending to small businesses, including credit guarantees and support for microfinance. Affordable capital can unleash Congo's entrepreneurial energy. All reforms rest on fiscal discipline and better governance. Debt reduction, transparent finances, and anti-corruption measures are non-negotiable. Only a predictable, accountable environment will restore investor confidence. The time for talk is over. Congo's future depends on action. The Republic of the Congo stands at a crossroads. The economic slowdown, driven by oil dependency, joblessness, tight credit, inflation, and debt, has exposed deep vulnerabilities. But within this crisis lies a chance to break the cycle. The path forward is clear: diversify, reform education and labor, unlock credit, and commit to good governance. These aren't just policy tweaks. They're a new social contract, investing in Congo's greatest resource, its people. The journey will be long, but the potential is real. The coming months will reveal whether Congo's leaders can seize this moment or remain trapped by the past. The future hangs in the balance, and the world is watching. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.